Hey traders, welcome to Charts and Coffee. Great to see everybody. Happy Wednesday, everybody. Rocking today a little mug of, actually I made it an Americano. It's been a minute. Oh, that's strong. Okay. Hope everyone is doing great. And we are going to embark on a look at the first trading day of May. We have left April in the dust, and gosh, you know what? April, I have to say, categorically, as a trading month, and I've read this all over the interwebs, not that it matters what other people are doing either, but it was just really widespread, a very difficult month for a lot of people. And it really didn't matter what kind of strategy you used. It was just a challenging month, right? There were some winners or some losers, but it was a challenging month. And the challenge really stems from one thing that we all have to contend with. And that was the disappointment discounting of the fact that we're very likely not to have as many rate cuts as was anticipated in, say, Q1 or even Q4 of last year. So when we have to take away something, when the market says, hey, we're not going to get this scenario, whatever it may be, good or bad, and we have to unwind that, there's always going to be an adjustment. And in that adjustment comes a lot of times some pain. Now, yesterday was very interesting. And I'll tell you, it's the first time we've seen this kind of reaction in this year that I've noticed this punctuated. And in the free video, by the way, I dove into a lot of detail on what the month-to-date strength in the different sectors that have been leading the charge higher, because there has been places where strength has ruled, whether that be metals and mining, gold miners, for the most part, oil services, oil and gas explorers, the energy sector. We've had a lot of strength in those specific places, led by things like crude oil, copper, gold, silver. So when at the end of a month, and the reason I called yesterday's video the profit-taking sell-off is not to make it sound like, oh my gosh, this is the end, sky is falling nonsense, but this was profit taking. The places that we saw dramatic weakness, gold, copper, pullbacks on XME, those kinds of things, really were those very strongest sectors month to date having the very weakest reaction on a one-day relative performance. And it was really quite something. It was almost perfect in terms of what was strong and then where the profit was being taken. What does that mean, profit taking? If I'm taking profit in something, I'm selling it and I'm realizing a profit. But it doesn't necessarily mean that's a whole wave of net shorts. So we have to differentiate selling to close a position versus selling in mass to initiate a larger picture bearishness. And the same places that we were, for the most part, looking at chop and bearishness before yesterday are the same places we're looking at chop and slight bearishness today. But it is a new month. And the beginning of something is far easier to trade than the end of something. In my experience, by looking at my trades and studying them in TradesViz and looking at which days, which times of the month, which times of the day, I tend to do better. The beginning of the week, Monday, is actually easier to trade for me than Friday. The beginning of the month is easier to trade than the end of the month. The beginning of the quarter and throughout the quarter is easier to trade than the end of the quarter. Ends of things create an entirely different psychology in terms of what we're doing, right? So at the end of a month, what do most people do? If you are going to redeem, redemptions from your investment account, do you pay yourself on the 1st or 15th? No, a lot of people pay themselves at the end of the month. In fact, we've seen that there was a white paper done some time ago that says the last 3 days of each month tends to have the most redemptions. However, in the context of an uptrend, the next 3 days of the new month tend to see inflows, especially from the contrast of the last 3 days of the previous month. So we get a little bit of selling redemption. Let me pay myself. And then a lot of times more money gets deployed at the beginning of the month. And these are just general trends. These are not setups, right? But I'm going to typically have a little bit more optimism in the beginning of a month because, look, like Bob Seger said, you turn the page and there is a freshness to a new week and a new month and even a new day. So that is where we sit right now. However, the chaos in a lot of ways that April has left is going to be up to May to sort of sort out. And now we end up with, and gosh, I hope I've killed this once and for all. Now we walk into the, oh my gosh, it's time to sell in May and go away. Oh, it's a painful, painful, painful saying that does not bear out in the data. When people say, well, Rog, it's because of this and that. When you look at the seasonal data, when you look at the seasonals, if anything, and probably because April, what rhymes with April? April is actually seasonally more bearish than May. I think Alfie, if you're listening in our Sector Secrets Master, was saying, Rog, they should be more like sell in April and go away, but it doesn't rhyme, right? Am I being somewhat facetious? Yeah, but it seems to be true. So sell in April and go in. Someone fill the blank there. Someone give me a nice rhyme, a haiku, a short poem about April, because that really is where most of the weakness is. May is, in fact, not as bearish as April when you go back over multiple look backs of seasonals. So I just wish someone would just stop saying that. It's not true. April, though, we're gonna have a rhyme for 2025. We're gonna start a new April rhyme. Sell in April. I don't know. I'll have to think about that now. All right, so let's take a look at what we've got going on. Again, some chaos left behind, a lot of red candles on the daily time frames of the Dow. But what about things like GDX that were largely, this was the leader last year, solid green. This is a symbol that I would like to find an opportunity to get into this morning, as well as, maybe not this morning, but today. We're going to take a look at it this morning in the Sector Secrets Mastery. By the way, if you want to check out what we're doing in the Mastery, where are we looking? Why aren't we talking about earnings? Those kinds of things. We look at things very differently. We look at relative outperformance. We look at trends. We look at the things that tend to create not a volatile session or a big move, but follow through, right? But follow through. So the GC futures, which could map then to GLD, definitely on the radar. But again, last month, March, I don't remember seeing the kind of pronounced profit taking we saw in April. So that was really very dramatic, the kind of sell-off we saw yesterday. So if you're wondering, Rog, give me an example. Look at XLE. Look at XLE. Look at the strength we've seen in XLE, not just last month, but for the past really arguably 2.5 months. And yeah, but last 2.5 months. And you'll see, boom, look at that candle. It basically took back most of the gains for the second half of the month in one candle. Overall gains for the last 2.5 months. And in one candle, we took back the gains since April 17. That's pretty dramatic. Do I want to be a buyer? I actually do. I'm going to have to wait for a setup, and it's likely going to have to wait till later this week. What else do we have later this week? We have non-farm payrolls. Let's see. We got a couple ideas. Angry April. Bot says sell in April. It's a staple. April showers bring May flowers. That might work. Murph, who knew April showers bring May flowers might actually be a trading saying? Who knew? Sell in April and go away and come again just in May. That might be good. April Fools, sell the spoons. Rainy day. I'm seeing some talent out there. We will have to figure out how we're going to make April the new month of selling and being bearish. We'll see. But that's what the data pans out, right? Remember, a lot of traders are repeating things because they rhyme, not because they've looked at the data. Don't be one of them, right? And if you want to see, I think I dove into that in yesterday's free video. If not, I'm happy to dive and show you the data in one of our upcoming charts and coffee. We might have done it yesterday, now that I think about it. Anyway, so keep an eye on things like energy. I specifically like Exxon. We've got earnings in the rear view now. I probably, of all the things that I could look at in energy, specifically within the XLE, it's probably Exxon that I like the best. Roses are red, violets are blue. April's here. The markets the markets swell. That's funny, David. I'm telling you, we got some Shakespeare's in the house. All right, so this is what I'm looking for. Things like Exxon to potentially gain some traction. Now, I don't like the red candles on crude, but crude's lost its trend, and that's been that way since the 18th. The idea now is, is crude really cruising for lower lows? If we can really get some stability below $80 a barrel, it could happen. We're not there yet. And this line in the sand on the daily time frame at the 200 propulsion, which is the combination of the 8 exponential moving average and the 200. We also have the top tier, which is a little bit different a formula, but this similar idea. The idea here is if we can break that propulsion, if we break that equator, we're going from the bullish hemisphere, which we are still clinging to. We're just above the equator. We're just above that white line. And we cruise down into the bearish hemisphere. That could be a very, very different conversation, right? Once we get below the white dots. So we'll see. We'll see. All right. All right. Next up is, let's see. Let's take a peek at copper, because copper had a rough day yesterday. Copper did have a rough day yesterday, but is it still in an uptrend? Yes. So one of the things that I like to do with copper, and again, one of the things that I've taught, and probably most of you know this, whether you're in the Sector Secrets Mastery or not, is this concept of alignment, right? Alignment. Index, sector, stock. And in that order, right? And in that order, index being the top of the food chain, S&P, NASDAQ, Dow, Russell. In the case of commodities, it would be the commodity itself. So crude oil would be the top of the food chain for oil stocks. So after index comes sector. All right, well, if I'm looking at oil stocks, XLE. If I'm looking at copper, it could be XME, right? So what's then the sector with the group of companies that are most sensitive to that futures contract or that commodity? And then you get down to the individual stock. Most traders just have a list of stocks they like. Most traders will listen to whatever's being talked about on the news or whatever had a big gap up or gap down or whatever had earnings, and that's their list for the day. That's somebody, think of it this way. That's what you're doing right now. If you're looking at a big gap up, if you're looking at earnings, if you're looking at some move that was made dramatically so it ended up on some random radar, remember, you're not building a list. You're trading somebody else's list from the days prior. That's really what it is. Think it's leftovers. You're going to the fridge and you're grabbing some cold leftover, whatever was for dinner last night. That was somebody else's trade, right? Now we're walking in saying, oh, okay, right? So be really cautious of finding, oh, there was a big gap that was made. That was somebody else's trade. We're coming then looking at a continuation, and there very well may be sometimes, but remember, the bulk of the trade usually at that point was over. So instead of just looking to see what's twitching on any given morning in the equity markets and the futures markets and the currency markets, what have you, how about we have a consistent list, right? We have lists that have names like Freeport-McMoRan, GE, RTX, GDX, Exxon. Gosh, a lot of X's in that list. Apparently, April and May is the month of trading anything with an X in it. Maybe not X, though. Okay, X is not, though. But it's fascinating how many symbols I am looking at right now that have an X in them. Exxon, RTX, GDX, XME, FCX. Yesterday, we had a gorgeous intraday short sell in FCX. By the way, for those of you that are curious, Rog, do you just swing trade in the mastery? No, not at all. We day trade for about the first hour of the day. Then we segue over to some swing trading. Once a month, we get together for position portfolios, because why limit ourselves to one style when our tools and our indicators and our methodologies, depending on the time frame we're trading, can allow us different types of trades? So one of the things I really was looking forward to was FCX, which was the intraday short, right? Long puts, I should say, long puts, and then taking advantage of once it sinks down into the daily price movement range. Now, timing is everything. Timing is trading. Now we'll get long FCX calls. That is something that's most definitely on the radar. All right. So what else do we have here? There's nothing wrong with leftovers, I guess, in the fridge, but be careful, be careful. Now, X is interesting. What do you do with something like X? X is right on the precipice of a really big decision. This is interesting. I'm not going to trade X, but it is interesting. What do you do with a symbol? Where are my drawing tools? Like X. There we go. What do you do with a symbol like X where there's mostly red candles? I'm usually not interested in buying red candles. However, those red candles are coming right up against the equator. And if there's going to be support, two things to watch. I've got double Darvis and I've got the propulsion dots. If there's going to be support here, that's about as good a spot as any, especially with a neutral market. All right, we have a neutral market, gray, neutral, sideways market coming up off an oversold signal that accompanied this action through here. So a little smiley face, maybe that might be the smiley face pattern that a lot of folks are looking for in X. It's a very rare pattern, the smiley face. However, if we're going to see support, that's going to be where it's at. And then if you want to find it in a different way, let's say you're looking at a daily time frame that got particularly battered in April. And then you're wondering, hey, Rog, what about trying to find a long position? The candles are red on the daily. I really don't want to do that. But what we could see on the 1 hour, if things simmer down, what we could see on the 1 hour is ultimately neutral candles, yellow, maybe even bullish candles, green, start to form on that 1 hour chart and then set up maybe a short-term swing as opposed to a long-term swing. And if we're going to get that, this is a very good area to be able to see the 1 hour start to break the consistency of the red candles and start giving us more a view of the yellow candles, which are at least neutral, and then maybe succumbing even to the bullishness and printing some green. So we'll see what happens. But that's the way, if you're looking at a stock that you really like, for me, that might be XLE more so than say X, right? XLE has that big down red candle on the daily. Very disappointing in terms of structure. However, if there's going to be an opportunity, what I like to see is the 1 hour stop printing these red candles, start printing some yellow candles, and then break, probably the most obvious thing, break this downtrend. And remember, every single hour, we're going to have a new candle. That means every single indicator on this chart is going to recalculate, reconsider, and reflect what right now is telling us. So every single hour, the calculations start going and the indicators reconsider what's going on, right? Because they're recalculating, what does this open, high, low, close mean? What do these volume levels mean? What do these volatility levels mean? And then it'll reflect whatever the mood is. That's how you trust your gauges, right? You have to trust your gauges in that regard. So if we can break out of this downtrend, it may not take that many candles to do that, to go into a neutral environment. And so I'll keep an eye on XLE, maybe in a 1 hour, to deal with, look at that candle on the daily. That is just bonkers. That was the end of April. April really just wanted to leave its mark before it headed out. All right. So again, I'm not really interested in X, but I think I am interested in showing you all what happens after, say, a very chaos-filled month or week or even singular session. And how would we, if we were still thinking, I'm not bearish on XLE, but I just can't be as bullish as I once was because of that candle. How do I adapt to that? And the other thing here is, look at this Darvis level. I mean, it was already there. That Darvis little level was already there. So really interesting to see that we're in that support area. We'll keep an eye on it. That Darvis would have been in place since the 18th. So we'll see if that does hold or not. Those are all the things that I'll be looking for. As always, gang, thank you so much for being here for Charts and Coffee. If you like the analysis and you want to join us in the best community on the web, check out sectorsecrets.com. Come join us and see what we've got going on inside the mastery. Be good to each other. I'll see you tomorrow. Same time, same station.